These SPR releases can be disruptive at all before we come down to the granular details?
On the top line, it is going to be a very negligible impact. When we talk about the forces that are hitting the oil market, this does very little to change the tide. So it's quite minute. If you annualize what has been added, it's 0.04 million barrels a day. And if you compare that with what OPEC just decided to do with their output cuts, that was equivalent to about a 1 million barrel a day reduction. So, we're talking chalk and cheese in terms of the impact we've seen elsewhere.
But what about the cumulative impact of the last 6 months with the steady release? I mean, Will and I were discussing this offline. It adds up to about 180 million over the last 6 months?
That's right. So it's from May to October, they released about 180 million barrels. Now, that would have been priced in March because that's when it was announced. And so this is really a reflection of what has already been announced. So the impact already to date would reflect that. I think the reason why prices actually rallied following the announcement is markets were actually worried that we could see more aggressive policy announced. And part of that was curbing fuel exports. And that was a significant market concern. And the fact we didn't see that, that was a big reason why oil rallied.
Now, Vivek, I don't want to back you in the corner in terms of Biden's signalling mechanism when it does come to this SPR release. But if you look forward to, say, for example, December 5th, when some of the sanctions are going to potentially come into play and the impact that could have on oil markets, the fact we're not getting that Iranian crude online, is there any chance that we don't see oil prices cracking higher after all of those sanctions get imposed? Is there potentially Venezuela coming into the mix? Is there any other supply that could alleviate what is likely to occur?
Look, at this stage, if you're going to argue prices not rallying, it's not probably going to be from an additional supply source reacting very quickly. It's probably going to be demand being much worse than expected. That certainly looks to be the case right now. And the sector which actually has the most incentive to respond to current prices is actually U.S. oil. But what we've seen from the U.S. shale oil side is very much a discipline to return to shareholders or return capital to shareholders as opposed to maximizing production. And it is that situation which is really keeping the supply side very much lower than what people would have expected by this time of the year following the Ukraine war.